The shares of NIO have started to rise. This is partly related to Tesla's shares, which have increased by 35% over the past few days. By the way, I recorded a video about Tesla's shares a couple of days ago, where I effectively predicted the beginning of this movement. Even before Tesla's shares started to rise, I also paid attention to a few parameters related to NIO's shares. I touched upon the market forecast, which actually surprised me. I then began to study the open trading volume of NIO's options. I was surprised by this huge column stuck at $5. After a detailed analysis of the volatility smile and 3D volatility, everything fell into place. But let's start from the beginning. What's happening with NIO's shares? After the previous report, the stock fell by about 10% and then remained in consolidation for almost a month. And now NIO is starting to rise again. Could this be the long-awaited rise to $70? Or is it another false start? Volatility in the options market can help us figure this out. I must say right away that this is a very complex market, but it often helps us determine what's happening at the moment. As we can see, volatility started to gradually decrease after the report and continued to decline until the end of June. For some strikes, it reached 55%, which of course happened due to the consolidation. The longer the stock remained in consolidation, the more the volatility actually dropped. But now it has started an upward trend, meaning volatility is rising. It's actually interesting how at first we tried to rise, then there was a false start, the stock began to fall, broke through this monthly consolidation, but the next day it started to rise. And as we can see, there is potential for further upward movement. Now let's look at the volatility smile. What's happening here? As we can see at closer strikes and closer expiration dates, volatility is increasing both in the direction of the stock's decrease and increase, meaning both for call options and put options. This indicates that investors and traders are pricing in the potential for both upward and downward movement of the stock equally. This is actually a good sign because usually our options market is always skewed towards put option. As we see at more distant strikes, meaning at further dates and expirations, the volatility in the upward direction does not increase. However, it significantly increases in the downward direction, i.e. towards put option. Again, this is a normal situation because investors and traders hedge their previously bought shares by purchasing put options, so there is nothing to worry about here. Now, let's look at historical and implied volatility to see what's happening there. As we can see, historical volatility is the gray line, and implied volatility is the white line. Currently, the volatilities are roughly equal, although implied volatility is slightly above its historical values. I remind you that you can trade not only the stock itself, but also the volatility. On one hand, trading volatility is easier because we have a baseline, which is historical volatility, towards which implied volatility tends to revert. On the other hand, it's more complex because trading volatility requires the use of options and sophisticated combined strategies. I will now show you one such strategy to provide a practical example, rather than just making empty claims. Let's assume that volatility will fall and return to its historical values. AI suggests several strategies for us to choose from, for example, selling 2 call options with a strike of $5 and buying 1 call option with a strike of $4 for September. This strategy is indeed complex because it involves both different strategies, such as the sale and purchase of options, as well as different quantities of options, i.e. 2-in-1 option, and most importantly, different expiration dates August and September. This is a really complex strategy, but very interesting. Here is the profitability and efficiency profile. I really like such strategies. They can be played very skillfully and can generate profit regardless of the stock's direction, but proper management is crucial. Closing the option at the right moment is essential. This requires skillful management, but is very intriguing. If you understand the options market, you will definitely start making money. I guarantee it. However, I would not recommend blindly following AI suggestions, as these are examples of potential actions. I think we have understood historical volatility, so now let's look at the trading volume of options. As we can see, there's a significant volume concentrated at the $5 level, and today the stock couldn't overcome it. This was a very strong resistance level. Those unfamiliar with the options market might not have noticed this level, but I'm showing you what exactly stopped the stock. Many might ask why there's resistance at $5 when there's no apparent trading activity at this level. Here I show you the substantial resistance volume in call options. It was this volume that halted the stock's upward movement. This isn't a very good sign because the resistance is still in effect, although we have tested it once. As we know, the more we test a level, the more likely it is to break eventually. The overall trend is very positive, with almost all stocks related to electric vehicles gradually rising. This is also partly due to Tesla's stock movements. I recorded a video about this 4 days ago before the movement even started, which you can watch. If we overcome the $5 level, it will likely happen due to some news or increased trading volume, such as a news release or a report. We can see that beyond $5, there's no significant resistance, indicating a potential free flight upwards. This might trigger a short squeeze followed by a gamma squeeze, and the stock could rise significantly, similar to what happened in July 2023, almost a year ago. In late July 2023, the stock began to rise and increased by almost 100%. This could potentially repeat this year. As we look at historical data, resistance at the $11 level couldn't be overcome until late July 2023, leading to a relentless upward movement once it broke. Such growth might be around 10%, and we can expect a similar reaction this time. Market makers will likely resist, but hopefully they won't succeed in stopping the price movement. Now, let's look at the market forecast. If we examine the forecast for August 2024, the highest probability is that the stock will be between $4 and $5, the range we are currently in. There's no significant movement expected either up or down as the market is pricing in stability. However, the market is slightly more inclined towards growth rather than a decline. The probability of the stock falling to $3-3.5 is only 20%, whereas the probability of rising to $5 to $6 is $25 to $6 is 25%. Thus, the market is actually predicting growth for this stock by the end of summer. This is not a guarantee, but rather an illustration of how probabilities are distributed. The market incorporates all available information about options, derivatives, news, and so on. Naturally, if additional news comes out, the market might reassess and change its forecast. For now, this is what we have, although market forecasts can change daily. Looking at the market forecast for the end of 2024, the market predicts the same scenario: the price will be between $4 and $5. This indicates that there is not enough information for a precise direction, as there are still upcoming reports and unknown data. The market remains in a state of anticipation, which is a prudent approach. As a reminder, my philosophy is not about predicting price movements or forecasting stock behavior. My main goal is the strategic management of positions to ensure profitability regardless of the stock's direction. This involves constructing positions so that we profit whether the stock goes up or down. I will now show you one of the strategies I developed to illustrate this point. As we can see from the profitability profile, if the stock rises to $9, we can make $2,000. If the stock drops to $1, we can still profit. We earn money regardless of the stock's direction, although there is a drawdown at certain price levels, which can be mitigated. This position involves options. However, this drawdown can also be managed. We can sell options with closer expiration dates, hedge these sold options, and buy additional shares. In essence, we can manage positions skillfully, minimizing any potential losses. This is my approach to constructing positions. Yes, the stock has potential and could start moving and accelerating, but if that doesn't happen, we can still make a profit. This is what I find most appealing: being able to combine strategies, open various positions, and ensure profitability regardless of the stock's direction. This is the essence of professionalism in trading. Now let's look at the 3D volatility. I remind you that this concentrates all the information about volatility, options, expiration dates, and professionals often use this to build their strategies. I'm showing this to you as well so you understand what is happening on a deeper level. Returning to the stocks, NIO shares were at their historical lows a few months ago, but now there are some small upticks. Again, if Tesla and other electric vehicle stocks continue to rise, it is quite possible that NIO stock could also start to rise. I've overlaid the correlation between Tesla and NIO stocks. There's no 100% correlation, but as we can see, there have been some changes recently. NIO shares haven't yet started to rise, while Tesla shares have made a significant leap upwards. There is potential for NIO shares to follow Tesla's lead. Again, this is just a hypothetical assumption. I'm not giving you advice you should make decisions based on what you think is right. However, the potential for electric vehicle stocks is there. As we can see, the hype around Tesla stocks is evident. As soon as a new wave of hype occurs, things could change. If we look at the S&P 500 index and other indicators, they are at their literal historical highs. However, Tesla shares are far from their historical highs and could potentially rise to those levels. As I mentioned in the video, everything is explained in detail there. Consequently, other company stocks could also grow, just like Tesla's stocks. I also remind you that I've launched a brand new portfolio from scratch, where I show how I buy stocks and form the portfolio. I'll try to release a new video soon, so subscribe and leave comments. Good luck to everyone.